All right, so if I wanted to be a little bit more bullish skewed on this, then what I would do is, like I said, I would pick the 30 deltas on the put side, okay? So, instead of picking those, like 38.75 strikes, we're moving them up a whole 125 points higher on both those put strikes, okay? So, if you want to skew this trade to be more bullish, what you would do, you okay, buddy? What you would do is you would basically move the strikes of the put side up, or what you could do is you could make this bottom one wider, okay? And then you can see what that does to this, tent, right? So, and also, what it looks like at expiration, right? So the max loss is a lot more down here if SPX drops below 39.84, okay? But the max loss, if it goes to the upside, is a lot less. It's 9,500 on the bottom, and it's 3,450 on the top. But you can see, like, as time goes on, right? So, like, about halfway through the cycle of this, this T+1 line is skewed more positively to the upside, right? So, like, you can actually be, at $600 profit with SPX at 4,300, and it's literally only 75 points from its upper strike, or from the first short strike on the call side. Whereas if you were 75 points away from the bottom one, you're up 391, right? So this favors more upside movement, right? So not only now are we higher deltas on the put side, but we're also wider on the bottom as well, okay? And you can do the opposite if you're slightly leaning more bearish for the range boundness. But this honestly is a trade that I put on, I would say, maybe 3 to 4 times a year. And I'm not kidding you. It works, I would say, 80 to 90% of the time. Okay, I put this trade on here recently when ES was in that 3,800 to 3,900 range, and I collected. I think it was about $800 to $900 credit, and within a few weeks I was up $450, and I took most of them off at that point. I put this trade on last October and accomplished the same thing. I put it on in June of last year, and I put it on in January of 2022 as well. And I also put it on one time, I think, in 2021. The problem is, in 2021, we never really got that oversold. I mean, the biggest pullback I think we had was like 5%. So, I'll put a trade like this on after we've had a big oversized downside move, like maybe 10% drawdown. You want to look at like the RSI and look at how oversold we are. If we're down 2 standard deviations, something like that, most likely we're going to have an oversold bounce at some point. And IV, typically is high during that time, and IV typically, comes back down after that, right? And this, again, if I put a 5% drop here, right, I'm at $1,000 profit if SPX makes it to 4,200 by the end of the month. Okay, so I gotta wait 4 weeks to make $1,000 on a one lot. Okay, that's pretty good. Okay, so this is kind of like my golden goose trade, one of them, right? That it just has a really high probability of success, right? But you have to know when to time it, know when to get in. We have to be in a high IV environment. You have to think that we are going to, have an oversold bounce or stay range bound for a little while or not drop much further. Okay, it's really a great trade to put on. Now, I'm trying to think whether I want to go over. So let me do this. So let's say you actually had more of a bearish bias to the range bound. So let's say I wanted to make this 50 wide on top. and 25 wide on the bottom, right? So now you get the opposite effect. You get like a 36.85 loss and a 1100 loss on the bottom. Let's see what this looks like. So by the end of the month, you can see how this is more skewed to the downside, right? So you're actually below, here's something interesting. The break-even point is below your short put, right? And you're still in profit, right? So with it at the short put, about a month out, you're at $300 profit. So that's kind of cool. You can see how helpful that is, and again, let's see, let's make this even more bearish skewed, right? So let's do 43.50, right? So now it's really skewed to the downside. So now your break-even point on the downside is even lower at 38.40, okay? And now you're at $800 profit. You having fun, buddy? You're at $800, almost $900 profit with SPX at that short put, okay? So, and the other thing you can do with this stuff is you can enter, a put credit spread first, if you assume price is going to go up a little bit. And then once you think, on like smaller time frames, like on the 1 hour or the 2 hour, or like the 4 hour chart, we're starting to get a little overextended. Then you can slap that call credit spread on top of it. Okay, so you leg into the iron condor. Okay, and then you just park it and you just kind of collect the premium from there. And it's kind of more of like a couch potato trade at that point where you don't have to watch it as much, which is nice. Or you can leg into, say, like an iron condor or iron fly, I should say. So like, let's say, with SPX at 41.50, like let's say I think, and I've done this before too. Let's say I think, all right, SPX is going to end up going up to 4,200. Okay, so and I would collect quite a bit of credit on this, right? So this, let's say this is 150. And this, so how wide is this? 25. So this, this is probably 130. Okay. So you're collecting a ton on here, right? So if SPX rides back up to 4,200, then you can slap on the 4,200 by 4,225 call credit spread for probably trying to think here. Yeah, let's see. So let's say we'll call this 100, and we'll call this one we'll call this one 85. Okay. So let's zoom out here. So you can see this is literally a no loss trade here. Okay. So no matter what, we make $1,000 profit on this, and you can just let this sit and guarantee yourself $1,100 profit, right? Let's make this. Let's say this was actually 105, right? So you're making minimum 1,500 to 1,700 here, and then this one, let's say this was actually, if you got even better of a fill. Okay, so it's still about $200 difference no matter what. Okay, but you get my point, right? So if you leg into that iron fly, you put yourself in a situation where, you're not going to lose on the trade no matter what happens when you hold it into expiration, right? So that's something to keep in your back pocket as well. So let me exit out of here, and then I think what I'll do is I'm just going to kind of go over like some key points here, okay?